Hello, everyone. My name is Glenn Barber. Welcome to the North American Bitcoin Conference. It's great to see everyone. Thank you so much for coming, learning a little bit more about digital assets if you don't know it already. I run the business for Copper here in the Americas, and for anyone that doesn't already know, Copper is a global digital asset custodian, and our job is to make sure that if you are an institution, we guard and safekeep your digital assets and crypto in the best possible way. My topics today are about capital efficiency and counterparty risk. And I think these are really important characteristics because if you come from the traditional financial world, or even if you have money in a bank or gold in the vault or want to just keep your assets secure, these are important characteristics that come into play as we build out the digital asset ecosystem. So again, one of the things that our first slide will highlight is how institutions are really coming into crypto at this point. You can basically see that, even with Bitcoin today at around 42,200, the market cap of Bitcoin is probably $900 billion. It was over $1 trillion earlier this year. And if you look at the right side of the screen, you just get a sense of the types of institutions that are coming into the space if they're not already here. I mean, names that we've all heard about: MasterCard, PayPal, Facebook, BlackRock, Bank of America, Tesla, Square, right? And you can see that it's a really diverse portfolio of companies because, as most people know here, blockchain, digital assets, this is more about the global economy and technology that is going to allow the global financial system to change in very, very materially different ways. Again, another slide to look at the institutional adoption of crypto. Not really necessary to go into the details, but if you look at the right, at this point in 2020, it is basically estimated that institutions represent only 4% of the total global asset market in crypto, whereas in 10 short years, which seems pretty far from now, but will go by much quicker than most of us realize, they will probably be estimated to be at 60% participation. And again, what this means is that there's a lot of new entrants coming in. It's global in nature, and we really expect this to have a huge, huge impact into the marketplace. Now, why are we here? Why am I talking to you today? Simply because, as a bit of background, I come from traditional finance. I have a background in capital markets. And there's a lot of things that institutional investors in particular take for granted in things like the stock market, the bond market, even the foreign exchange market, that are not yet quite available in crypto because of the fragmented nature of the market. Right? Crypto is meant to be a peer-to-peer, global, borderless, permissionless system that cuts out middlemen, becomes more efficient, and reduces fees. What happens, though, is that there are ways where counterparty risk and capital inefficiencies come into play. And what I mean by that, if you are trying to generate returns in digital assets, you want to get the most return possible. And you want to have the most capital efficient deployment because the worse your capital deployment is, the less your returns are, right? You don't want to have money at different banks simply because you want to use their services. You want to kind of have one place, if you're an individual, and you pick the bank that can offer you the most services in a bundle, whether it's checking, savings, mortgages, loans, financing, or anything of that sort. Well, the same is true in crypto on the institutional side, where you want to be able to access the market in a very efficient way. I mean, imagine this. You're online, and you've got your online broker, whether it's TD Ameritrade, Fidelity, or anyone else, and you're looking to buy or sell a share of Apple, and they say, hey, this is great. You're going to have to put money with us first. We're going to have to transfer it to the exchange, like the New York Stock Exchange or NASDAQ, and you have to wait until that happens. We have to credit your account, and who knows what happens to the share of Apple in that time, but we'll let you know when it's done, and you can trade away. That's the way it happens in crypto. That's the way it happens in digital assets, right? Not exactly efficient. So what we have here is, how do we solve this problem? we want to do things where you don't have to necessarily spread your assets out. You don't have to pre-fund your money at various exchanges. You don't want to take on counterparty risk. Because the other thing that happens, right, is if you put money on a crypto exchange, which is the way you have to do it, you open up an account, you send money to them on a pre-funded basis, they credit your account, and it's only then that you're able to trade. That's very, very inefficient, but more so, you incur counterparty risk. How does this happen? Well, if you put money into an exchange wallet ahead of trading, it is usually commingled, which means that your money is not segregated from anyone else's. Therefore, that exchange wallet where you just put your money in is basically a huge pool, and eventually, if it's big enough, a honeypot for potential hacking, right? Because if I'm a hacker, where am I going to go? Am I going to try and find someone's account that has $5,000, $10,000 in it? Or am I going to go to a wallet that could have 60, 80, $100 million in it, right? I know where I would go, and I'm guessing that all of you would do the same thing. So the bottom line is, if you're an institution in the digital asset market, you have these two very, very important considerations. Why do I have to deploy capital in advance to multiple different locations? Because I should just be able to do it from my one point of origin. And when I do that, why am I taking on additional counterparty risk? Because I'm forced to put it into a wallet, a digital wallet at that exchange with everyone else's money. And despite digital assets and distributed ledger technology being at the forefront of how we do things differently in global finance and in other industries, these problems arise. Now, as you know, the reason that we have a lot of investor protections in things like the stock market and other places is because they've been put into place by regulators over decades, right? We have FDIC insurance to make sure that our money in banks, if a bank goes under, our assets, our dollars are protected. We have SIPC insurance for our brokerage accounts. Therefore, if Charles Schwab or Fidelity or E-Trade go under, to a certain extent, up to $250,000 or $500,000, our stock portfolios are protected. These things came in over time, but do not exist in digital assets quite yet. Obviously, I think some of the panels that have been here earlier than me, they've talked about regulation. They've talked about how the US government, whether it's the SEC, the CFTC, or other regulatory bodies, are looking at how to put things into place. But the bottom line is that crypto moves so much faster. It moves at light speed. So whether we like it or not, it is sometimes incumbent on the private sector to put into place things that can function in this same way. And so one of the things that I'd like to talk to you about right now is Copper's own Clearloop product, right? It's not necessarily that I'm here to sell you Copper. It is the sheer fact that Copper, as a digital asset custodian, is also looking at how to minimize counterparty risk in the digital asset markets. So the interesting thing about Clearloop, which is right here, is that, again, if we go back to that traditional method of how crypto functions now, all of us are an institution or even an individual, and we have to send all of our money on a pre-funded basis to that exchange wallet in order to be able to transact. Not capital efficient and not free of counterparty risk. What the Clearloop solution says is, hey, wouldn't it be a good idea if I could keep my assets in custody and they would stay there while I was trading on an exchange so that I didn't have to move my assets beforehand and I could wait until I have to basically settle with the exchange or exchange value in terms of dollars or other fiat currencies for the digital assets or for the crypto that I purchased, sold, or otherwise transacted. So I just want to emphasize the fact that Copper's Clearloop product is a way for institutions in particular to minimize counterparty risk because we don't know what's going to happen when something blows up in the digital asset space. And please, unfortunately, mark my words, it will. I personally have the unfortunate experience of having been through the Lehman Brothers bankruptcy. And I can tell you that at that time in September 2008, we had all sorts of opinions as to what might happen, what could happen, or what was going to happen. We had our own expertise. We had outside counsel. We had inside counsel. We had the US stock exchange regulators. We had government officials. We had everybody as the stock price was cratering as to hypothesizing what would happen in the deepest, most capitalized, most regulated equity market in the world. I unfortunately can also stand up here and tell you as fact that no one, not one person got it right. And it was impossible to get right, simply because you don't know what's going to happen when lawyers and investors are scrambling to protect assets and then going into courts of law. So the reason I give you this context is because it gets to an order of magnitude that is so much greater when it comes to crypto and digital assets. Because, let's face it, there is no precedent. There is no court system. There's no US court or Japanese court or Swiss court or UK court that has dealt with any kind of counterparty risk explosion or a hole in someone else's balance sheet or a bankruptcy. We're all going to find out at some point, and I hope it is not in the near future, but it is inevitable. And so my hope here today is that particularly institutional investors that are looking to get into crypto know that there are solutions for these sort of things being built out. And again, in the absence of a complete regulatory framework that would take this from a top to bottom perspective and give you the same investor protections that we're all sort of used to and take for granted in our other traditional asset classes, there are going to be firms like Copper and others, right, trying to put pieces of this structure in place for the benefit of digital asset investors. Our product happens to be called ClearLoop, and we allow our customers to trade on exchange without their assets moving to the exchange. It is a contractual relationship, and with API calls, you get the benefit of your buying power at the exchange without your assets ever leaving custody at Copper. We hope to expand this system to include most market participants. And again, we do believe and we favor a constructive regulatory framework that will help investors of all sorts, individual, institutional, or otherwise, trade and invest in digital assets in a safe, secure way with minimal counterparty risk and greater capital efficiency. But in the meantime, while they get their framework in place, we at Copper, and again, other firms in crypto, are doing our best to play a part in that. For anyone that's interested, we have a booth here. The ClearLoop product is very easily demonstrable. It basically shows you some of the exchanges that we're integrated with and some of the exchanges that are coming. And again, we want this to be a global settlement and clearing network for institutions that will increase capital efficiency because you no longer have to post in sort of a hub and spoke manner to the various exchanges. But more importantly, your principal and your investment as it is at significantly lower risk because, simply put, it stays in the Copper custody wallet, which we believe is unique in the global digital asset marketplace. This is just one of our home screens. Again, I don't have much time left. My name is Glenn Barber. I head up the business in the Americas. My staff and I are downstairs at the booth. If this resonates with you, wonderful, but hopefully this was helpful, somewhat educational, and I just want to say thank you so much for your time.
All right, Glenn, thank you.